Well, this is our second time doing this remotely. First and most importantly, let's make sure all of our friends and clients are staying safe during this pandemic. I know we're starting to, simulate back to society slowly, and different states are doing it different ways. I guess the best way to start here today is let's walk through the process here since May. The Fed meeting was about a month ago, and the market performance, to say the least, has been very impressive. There's a lot of Fed chatter out there. Let's get your early thoughts.
Sure. Thanks, Mike. So the last Fed meeting, the end of April, clearly since then we've had very dramatic risk-on trade. If you look at equities, you look at the credit markets, markets on the risk side have been trading extremely strongly. And a lot of that has to do with the Fed programs that have been put in place clearly since March 23rd in particular, where the Fed unleashed an unlimited balance sheet, if you will, in their terms, but also the opening of the economy. So the two forces in conjunction with each other have led to a very, very strong risk-on environment. We had an interview early in May with Fox Business. We talked about 60 basis points in 10-year yields and how that didn't really offer value relative to some of the higher yielding asset classes, investment grade and high yield in particular, selectively.
Yeah, it's really been impressive. The last time we spoke, we talked a lot about the amount of issuance that came and the support of the Fed. And now we've seen an amazing tightening of the credit, in these issuances. It's quite fascinating to watch it on a daily basis from our seat, obviously on the desk. What's been some of the key themes over the last month? You have the big question that everyone wants to know is, can the Fed do more?
Sure. Very, very, very good question. So what are some of the key themes? I mean, anytime I think you get interest rates down to the zero lower bound, which is where the Fed has gone here, the question from the market is, what's next, right? So when you're very, very low, and now they've implemented, alongside the balance sheet expansion with treasuries and mortgages, they've implemented all of these lending facilities, which I think, quite honestly, they're very focused on right now. So what can the Fed do more? What is the market looking for in terms of the Fed? There's been talk about negative interest rate policies, which we've talked about quite extensively to clients. We don't think that is on the table right now for the Fed. When we look at it practically, and we also look at control policies, that's certainly on the table. But right now, we would say what the Fed has in front of them is really where their focus is going to be. They're likely going to give some guidance here in terms of some of the economic data going forward, but we don't expect any major themes changing from the Fed at this upcoming meeting.
Understood. Thank you for that. So long-end rates have backed up here lately. It looks like the Fed has reduced its asset purchases on the Treasury and the mortgage side. Is this a problem?
I don't think the scaling back of asset purchases here in it by itself is an issue for the Fed. I mean, when you look at it, when the Fed came in March, there were some extreme dislocations in the Treasury market, certainly in the mortgage market. The Fed has done, I think, a very good job of quelling some of that volatility, narrowing the bid-offer purchase program. If you look at their balance sheet expansion, we've gone from $4 trillion to $7 trillion. Most of that is in Treasury and agency mortgages securities. So when you look at that paring back, I don't think it's a problem. I think what you're seeing on the long end of the curve right now is a natural expression that the economy is reopening. Things seem to be getting better. Risk assets are more in favor than the flight to quality trade that we really saw from March through where we are now in terms of piling into sovereign debt, piling into yield levels, which really don't seem to make a lot of sense at this point in time. So I don't think what the Fed is doing in terms of backing away here is a problem, but I wouldn't necessarily take that also as a view in terms of where the Fed stands going forward in terms of balance sheet expansion and further asset purchases. Reopens here is very uncertain. I think the equity markets have been following the credit markets. I think that's productive on a short-term basis.
About this. What's your thoughts on LIBOR and SOFR and the transition over, in
Sure.
light of what this pandemic
That's another very good question. Thank you. I appreciate that. So LIBOR SOFR is moving forward. If you look at the ARRC, you look at the committee, you look at what the banks are doing in terms of transition, there's no question that they want to move forward with regard to benchmark transition, with regard to SOFR. Questions that come up here in this environment here. In particular, if you look at the performance of LIBOR versus SOFR, you have one rate that obviously is very intricately tied to repo and to the funding rate, the effective Fed funds rate, which is close to zero. And then you have the unsecured rate, which obviously widened out in the course of the last 3 months. that's really what unsecured rates are really supposed to do. I mean, LIBOR is performing relative to what it's supposed to do historically. The challenge here on a short term not be necessarily the way forward here. So, SOFR is going to move forward. We talked to a lot of regional banks. You talk to a lot of banks that don't have funding capabilities relative to repo in general. So they will look for alternative rates. And I think this will not be one size fits all. But in terms of SOFR, we think that initiative clearly is moving forward. But, you look at prime money market funds, you look at government money market funds, you look at that behavior in terms of, like I said, secured versus unsecured, depending on your funding base and how you drive your business on a day-to-day basis. We do think this will evolve in the months ahead. And we do think there very well could be multiple replacements for LIBOR, and in conjunction with that, and I'll end on this, Mike, if you listen to the chairman himself, if you listen to Chairman Powell, he spoke in front of the Senate Congress earlier in February this year. He said, and he was questioned very extensively on LIBOR SOFR replacement, and he was pretty explicit that he thought there could be multiple replacements depending on the nature of the end user. And in fact, there is a letter that is floating around out there as of May with the chairman, in fact, solidifying that. So we expect this to be a fluid situation. We think SOFR will clearly be a part of the landscape.
Yeah, I appreciate that because, I have the good fortune of talking to you on a daily basis. And, I know you put a white paper out a few months back on alternatives to LIBOR and SOFR. So I encourage all of our clients to take a look at that. Greg's been very close to this over the last year or so. And I think he's got a really good pulse on what's going on out there in reference to this very important topic that especially Treasury teams are looking at on an ongoing basis. One last question, Greg, and we'll let you go, and thank you here again for your time. I'm going to ask you to put your name to it. I like to do that with you. This is going to be a much more watch Fed meeting than normal by both, obviously, Wall Street, who always watches it, but I think Main Street also. I think people want to understand what's going on. I think there's a lot of people on Main Street who don't understand the 40% rally in the market, et cetera, and why. What's going to be, two-part question, what's going to be the number one theme after the announcement, after the minutes, after the press conference, et cetera, that Wall Street's going to be talking about? And then separately, what will be the one theme that Main Street is talking about?
Two very good questions. I appreciate them both. I think the Fed will, for the most part, they will talk about their lending facilities. I think is front and center here. They've got the municipal liquidity facility, which obviously the state of Illinois has already tapped as total. I think facility at this point at these state and local municipalities are clearly suffering from coronavirus. In conjunction with that, the Main Street lending facility. So I think the Fed will be clearly questioned about these lending facilities, clearly questioned about their role. But, we've been pretty steadfast here. I mean, we think Jay Powell is one of the more thoughtful Fed chairmen. When you look at the Fed listens, you look at some of their programs really over the last year in terms of looking at their policies. They've been in the trenches, really. We're trying to figure out this overall job situation before this happened. So I do expect the Fed to be very, very thoughtful. I do expect the Fed to be questioned. In our white paper, we talk about this income distribution and income inequality. The Fed is certainly a part of that dialogue. We put that in our white paper because we do feel it's very important within the context of what's going on now in the country in terms of the Fed putting asset prices going up and other people being left behind. So I think, like I said, I think Jay Powell is a very thoughtful man. I think he's a very thoughtful Fed chairman. And I think this will be a discussion front and center at tomorrow's meeting.
Greg, as always, I appreciate you greatly for taking the time. I know this is a very busy time for you, watching what's going on here with the Fed. I appreciate your diligence. It's great to have a member of our team that really dives deep on follows Greg on LinkedIn or any of our clients to call your representative, get his daily notes. They're very concise, easy to read, but full of great information and nuggets. His weekly piece is outstanding, and his white papers are second to none. So, Greg, I'll give you a virtual handshake. Thank you again for your time. I always look forward to doing this, as I know you do. So our streak continues. We're not going to let a pandemic stop it. And, to all our clients and our friends out there, please remain safe. It's still evolving here. Greg, thanks again for tying it all in, and we wish everyone good
Thanks,
health.
Mike.
Thank you very much.
Good to be here.